Do you give permission to record?
Oh, do I have to do I actually have to authorize that?
No, I was being a dick.
Oh, okay. uh, okay. So where do we want to start?
So
All
we're
right, let's
starting
let's
off
go,
the.
let's go real quick. Just get out of the way. What's the I haven't looked. What's Trump doing now? What's his big plan? We trust the plan. What
Well,
plan are we
so
trusting?
trusting the plan. Okay, two parts about trusting the plan. First of all, apparently by his text, the Iranian infrastructure is just done, right? So we have to you know, give them credence because they're just completely destroyed, and the U.S. is just going to come in and save everything. That's number one. Number
Wait,
two,
what's destroyed? What's entirely destroyed?
uh, basically the tweet was, and if you look on Trump's, um,
Truth
you know,
Social.
yeah, Trump Social or whatever.
By the way,
Um,
I don't mean to cut you off, but dude, have you actually logged into Truth Social?
I do not have an account. I don't want to. I just see screenshots posted on Twitter, and
I
this
was
is what I'm
curious. Yeah,
echoing. Feel free
no,
to
it's
fact
sad,
check.
dude. It's sad. It's like,
Feel
dude,
free to fact check.
yeah, it's well, no, just True Social. Like, you get bombarded with spam ads for diabetes medications, and just
It would fit.
it's
It
clearly
would fit.
geared toward memas and peepaws that can't
It would fit.
can't figure out anything. It's really it's so it's honestly, I like, it was embarrassing looking at what
So
True
that's
Social
number
was putting
one.
out.
Iran is in shambles. They're just begging to make a deal. That's number one. Number two, apparently the king of uh, Britain came and was making a case for making a war with Russia. I'm not joking. That was the literal reason why he was here. He made a case for making war with Russia.
For the United States to go to
Uh,
war with Russia,
Joint task force, Britain and the
NATO.
US to, yeah, not even NATO, just he made a case about, oh, we've been through so much together. We've been through world wars. Let's go to war with Russia. Yay. And all of Congress was clapping and so forth. So, dangerous times.
Wow, wow, wow. That I'm sorry, I didn't hear that. That's
Yeah,
a
yeah. King Charles the Third, I believe.
uh
Big fucking deal.
the boy uh boy, they're begging to get whacked, aren't they? Like that, man. Uh, that's not
Yeah, I know. There's misuse of
UK,
words,
man.
right?
Not just NATO, but the UK in particular is their military. They don't really have a military, that and especially with MI6, and what MI6 and the CIA have done in trying to assassinate Putin and so forth, and the way they keep on attacking the nuclear. They call it the nuclear triad of in Russia, and man, they're this may be a bit conspiratorial, but it does make me wonder. I know Putin's rational and everything, but part of me does wonder if Putin may be kind of like an operative for the West in many ways, because
Well,
it's so.
I mean, you do know he was Henry Kissinger's private driver, right?
Yeah, he was his limo driver, right? So
Just saying.
that's right. I've looked into the history of that, and he's been, even though he tends to do what's best for Russia, he lets the West get away with so much.
Well, look at
And here's
Ukraine.
the thing: is yeah, Russia, like I said, Putin has been holding the dogs of war back for a
Like,
really long time in Russia.
real talk,
Like,
he could just, like, legitimately, under his own doctrine, launch tactical nukes all over Kiev and just like take that fucking region and be like, fuck you guys, I'm out. He
Right,
could.
right. Now I can, of course he could, and he could be doing, I can understand how, from his point of view, there are many benefits for continuing the war the way he has. However,
Mhm.
uh, you get to spin up your military industrial complex, and then you get a better focus on what's going on with BRICS. You get emergency war powers, and there's a lot of benefits to just being at war overall. So I could see strategically an argument where you would just want to prolong the war, if you will, so you can, sort of aggregate more control
Mhm.
over, what I mean, over the situation in Russia. But even, Putin better watch out, because, man, the people from the right, the real heavy nationalists, they may be the ones to take him out, actually, because he's pussyfooting around
Right.
too much. So, like I said, with what I said in the email, uh, this is the seems to me the everything set up for Iran to have been sort of the opening kinetic salvo for a real World War III, sort of like the first act, if you will,
Well, and
yeah,
if you like factor in King Charles's little speech, like, seems
right,
to be exactly the plan.
yeah, yeah. So there's definitely a bifurcation that has taken place, and even more, that
Mhm.
bifurcation has been splitting much further with respect to this war. I mean, like, we have completely, oil's not even really an international market anymore. Like, that, literally, as we speak, trade routes and stuff are rewiring. You know what I mean? The whole infrastructure overall of trade, and like I said, the Eurasian continent overall. Like, that's where
Mhm.
I'll get into the thing about talking about, the argument where, oh, this Iran conflict hurts China. I was looking at some satellite data today that actually shows China is somehow still pumping their crude oil stockpiles higher. They're still stockpiling oil.
Whereas, just put it in perspective, like the U.S., it is not only dwindling but exporting.
Right. Right. And also, I didn't send you this chart, but
Mhm.
past 3 months, when you look at the amount of silver that China, because they put export bans
Mhm.
on. And if you look at the graph of gold and silver that they've accumulated within the last 3 months, it's like each month is a successive order of magnitude greater than the last. So it's literally a huge spike at about an 80-degree angle up. And you compare it to everybody else, what's happening in the United States? We're actually selling our resources to them at these
Right.
artificial discounted rates. You know what I mean? So that's part of the problem with this whole situation with the United States, as it is with oil. We'll get to that later, but with the oil not having export bans, when China does have export bans, we're our the Trump administration is artificially, suppressing that price and then selling it largely to the Europeans at discounted prices.
Sure.
And he's also opened the SPR again. So with our SPR, we're essentially selling our SPR to the Europeans at discounted prices now.
Right. So let's
And
tie
our
this into
SPR is
the
almost fully
graph that
run
we
out.
have
So,
on the screen with the
yeah, we'll
rest of
start
what.
here though.
Yeah.
We'll start here. We'll start
Sure.
here. So this chart is oil consumption and GDP. It's essentially I mean, it's never directly perfect, of course. There's some noise in the system, but uh, this is just for 2020. But you can take any year snapshot, you're going to get the same data plot. Okay. It essentially says there's a 1-to-1 correlation. It's near perfect for the amount of oil that's burned or consumed, right? And your economy. If you don't have crude oil, you don't have an economy. Okay. So you go to the next one. Now this is from the IAE, right?
Yep.
International Energy Agency. There we go.
Yeah, yes, yes.
It shows
They're the ones that put out the basic production and consumption units every week for oil.
Right. And this
So
is
if you're
this
an
is
oil
adjusted
trader,
for
you trade that
inflation.
on Wednesdays.
Right. So this is for 2021. You see the same thing. Essentially, this is adjusted for inflation and purchasing power parity. It says the same correlation. Essentially, you don't have oil, you don't have an economy. Doesn't matter if you're super sophisticated economy
Up and to the
or
right.
if you're just a bare bones economy. It
Up and
doesn't
to the
matter.
right. Yeah.
Right. It's up and to the right either way. Okay. So we have that premise. Oil is the economy functionally. Without, what happens if you have a bunch of machines that manufacture products? Okay?
What happens
no
if you have a body without blood?
Right. Right. Those machines, it turns into modern art sculpture, is what it turns into.
If you have a body without blood, it turns into that dude who made the sculptures, you know.
Yeah, the bodies exhibit. Yeah.
Yes, yes.
Yeah. I went to that, by the way.
I did too.
Yeah. So we have that laid out. So what's the market at today? Is it down, up? I think today
holding in highs,
down, right?
holding in highs. Did we want to finish with this thread here, or do we want to?
No. That's what I'm drawing. That's what I'm drawing towards is the market detachment from what the oil, what it actually should be. No, I was just going to talk about the S&P, what the S&P is doing today.
Do that.
Yeah. So the Dow is down, which makes sense. NASDAQ is up, and the S&P is down. But only by
down-ish. I mean, when you say down, you have to like keep things in perspective. Like, really, is this down? You know,
it's all
down.
high, either way.
Right, but it's like it's retraced from like, you know.
Now, here's the problem with this. There's clearly an optimism within the markets, right? A false optimism. Now you can say, well, the United States.
One thing I have to interject is like how the S&P is weighed, right? Because the S&P changes all the time, right? The S&P is the top 500 companies, but on top of that, they weight them, right? So if Microsoft is just crushing it and doing really, really, really well, they're going to weight them more in this index than they would say Disney, who's getting crushed. Right. So typically the S&P tends to be a little bit heavy in oil. I don't know why. And in tech, also don't know why. You know, the S&P weights itself, and that refreshes fairly regularly, right? So just like keep that in perspective.
Right. So essentially, what we're seeing, what I'm drawing as, we're seeing a detachment from markets. And
absolutely
at the moment, anyway.
Reality.
At the moment, in reality, right now, also gas prices, they're high, but they're not incredibly high, right? And of course, there's always a delay.
So actually, in fairness, just not to interrupt you, I actually predicted 106.47 today, and we actually not only hit that but broke it. Just saying.
And that's for gasoline?
That is crude oil. Crude light per barrel. I actually like predicted that in the morning, and it hit it and broke it just within not even 8 hours of my prediction.
Yeah, so. Perfect. And I have the target of within 3 weeks, it'll be up past 135.
So
Like,
we both been saying this very strongly online. I'm thinking 108.78. That's a bargain, right?
mhm.
Like we're thinking like 130, 150, 160. That's where we're
Mhm.
headed to.
Yeah, it depends. The market psychology is one thing, but I'm just talking about if you look at what the real deliverable price is, there's about a $30 difference. You know what I mean? So
Mm.
just add 30 to it, because within 3 weeks, that's
Yeah,
when.
because they're also factoring in storage costs and like other random shit, right? So you have to like factor in, the real value.
Right. And we already tapped the SPR. We've sold at discounted pricing. What I'm
Mhm.
trying to say is the delay of the 3 weeks, that's sort of when the all of the things that we can do in order, to play that shell game, that's when the game of musical chairs stops, is
Mhm.
within 3 weeks, right? Because deliver new contracts are going to have to be filled and so forth. So that's when
Right.
the real market in the tangible asset is going to have to catch up uh, to what the deliverables are. You see what I'm saying? So like
So you're gonna have to
this
pay the piper.
artificially low price will have to meet up to
You're
the raw
gonna have to pay
material.
the piper at some point.
Exactly. So now, then you have a further delay uh, by, you can say, if it took in 2008, it took 60 days. You can say, I don't know, man. You could say 60 days again. But
In
honestly, with
1979,
valuations
with the
being as
same
high,
oil shock, it was about 60 days. Yeah.
well, say that again.
In 1979, with the original oil shock, the stagflation, that was
Mm-hmm.
60 days as well.
Yeah. So we can probably say 60 days, and
Which is
then we'd
basically
expect.
like, I mean, like, you know, like,
Yeah, it's all
wh-
that's climbing. When
well,
did that last leg of the bottom go down? When was that
let's just
last?
get some perspective here, right? So, we had, this is April 17th,
Right.
right? So now we're at April, like basically into May, right? So we had $80 versus 108.
Yep.
I mean,
You
that's
know,
pretty much
yeah,
on money, you know?
yeah. And that actually,
What
tell me
what
if
what
I'm
that's
right.
saying is, I don't mean to interrupt you, but what that's saying is like we have a lot of room to mature.
Hmm.
I have these
Yeah.
levels planned out, levels marked out for a long time, brother. I have been following oil since a lot of people listening have been born.
Hmm.
So all
Yeah.
these levels are very carefully placed. We have a
Yeah.
long way to go. We have a long way to
We
go.
broke through quite a few of them. Look at that
Yeah,
huge jump
yeah,
right there. Yeah.
yeah.
So what
And
this
no,
is
no,
telling me.
I do have to give my little pat on the back. Look at how beautifully this works. I have not
Yeah.
drawn a
I
new
see.
level in oil in 5 years. Not one.
Hmm.
So every one of these is very well established. And what that means is that you have liquidity in the markets. People are trading at these levels, right? So that's the
Hmm.
reason why they exist and why they're so reliable. So all of these levels that you see here are very good points that you could take profits or you could buy
Right.
back in the event of a retracement, say like around here, right?
Right.
I am on record as saying, like in this climate, buying on dips is where you want to be with oil, period.
Yeah. Uh-huh. This is interesting because I'm seeing a similar pattern here. What I've seen, you've been tracking oil. I'm a big been a silver guy for decades, and
Don't mind if I
I'm
do.
seeing I'm seeing
One's terrific.
I've seen similar patterns in silver. Go back further. Yeah.
This is silver futures. So we're a little bit, hold on, put some levels here. I do follow silver pretty regularly, but I don't I don't think that we're on the uprise as we are with oil.
No, not at all, not at all. In fact, I hopefully, um, I'm hoping silver will continue to retreat due to mining issues because you need diesel to
I think
run
that's what we're
the
seeing,
mining operations. Yeah,
right?
right. I was talking more what I've seen historically with silver
Also the
is
broader
those big
correlation
buy
with
downs.
gold. Don't mean to
Mhm.
interrupt you, but the broader correlation with gold, right? So we have gold, kind of retracing a little bit. Obviously, we're still bullish of gold, but taking a little bit of a retracement here. So
Right.
silver falling in line.
I'm more talking about historically what I've seen in silver is with I'm talking about the behavior pattern. So what we'll see is a gradual climb, you know what I mean? Climb up, climb up, climb up, and then slam down. Usually
That
they've
is
been
a
doing right.
classic, retracement pattern. We've studied this a lot. If you follow my courses, I literally teach about this. Like we call that the Elliott wave, right? It is very, very easily seen. It's not magic. A lot of people like try to put it as like witchcraft or whatever. No, it's not. It's just about buying and selling patterns. That's all it is.
I was always under the impression that it was
Psychology,
because
market
when I'm
psychology.
talking when I'm well what I'm talking about is it's like one solid candle. Like as soon as it hits 100, there's just boom, immediate drop, and then it goes
There is
right back.
typically
See what I'm
you
saying?
see those at Fibonacci levels or levels like I've drawn in oil, and those are very carefully calculated, based on points of market liquidity where buyers and sellers are
Right,
going to market, right? So
right,
when we retrace or when we go to that, you'll typically see like resistance or support at either of those levels. And that's where
right,
people basically come to the table to make trade. That's all it is.
right. Exactly. What I was thinking was that those are when the the price actually has to meet the reality over time.
That's a
That's
good way to put
anyway.
it. Yeah, that's a good
Right.
way to put it. Because when reality hits, buyers and sellers meet in the middle, right?
Right.
They make trade
Right.
there. Yeah. So yeah.
Right. Exactly. So go back to the the next
Here?
slide. Nope, next one. Okay. Now, when
This
I was
one?
looking into this, yeah, that's it. When I was looking into this, the this is actually bigger than I thought it was initially. I knew it was big, but then when I did some digging, it's actually much bigger. Here's why. When you look at what's actually affected, crude oil, naphtha, LPG, look at the percentages on those. Okay. So that's what? Over 30% of the market. And how do I explain this?
I think what we're
Um,
trying to say is basically like here's gasoline right here, and here is the valuation of these guys over here, right? So we have like a very big um, overvaluation, right? So we have like a
right.
leveraging, if you will.
Well, no. What I'm getting at here is when you look at the okay, so you have what is the market, right? The international oil market. Okay. The market is the country's surplus, granted, right? It's
Right.
what they can actually export to the international market, right?
Mhm.
So it turns out that the amount of crude oil, it's about 20% of the overall supply, but that's even more when you take in the market, right? So it's a larger percentage of that total percentage
Of the total
because the
market.
pie you're drawing from is actually smaller, right? So that whole region is 20% of the supply,
Mhm.
but only a small percentage of that is in the market, right? So the that 20% in fact turns out to what for crude oil alone right now 30. You see what
Mhm.
I'm saying? So, and things
Right.
like naphtha and crude oil specifically, but you have natural gas, okay? And crude oil are the real big ones. Why? Uh, Natural gas is where you have the Haber-Bosch process, and then you get fertilizers and all the derivatives thereof, right? Crude oil, what's
Mhm.
so great about crude oil is you can fractionate it when you refine it into all
Right.
sorts of different products. So when you actually boil out what comes from that region, it's sort of the best of the best
Mhm.
for refiners, right? It's
Sure.
literally, and it was last week when those those large million barrel freights actually like sort of offloaded all their stuff in Australia. Okay.
Mhm.
Now it'll take some time because they still have to refine those products,
Right.
bring it to market, and so forth. But we're done with the availability of the crude oil to market, right? It takes there's a
Exactly.
further lag in the system for that energy to actually be in the market, right?
Yeah,
So I
so
would
just
expect,
if you're listening and not familiar with the processes of oil, it's non-trivial, right? So you have like distillates, which is basically what we consider diesel. You have the things that we put in our cars, and then this wide gulf of things in between, right? And so when you listen to the IEA oil reports every single week, they break it down based on those subclasses, right? So that's what we're talking about right now.
right. Now, if you want to go to, it's very unfortunate because you go to the next one. Okay. Now,
That's not good.
that's not good at all. Now, I've been following this aspect of the
That's
story
not
for a
good.
really long time. Right. Now, here's the big issue is what the US actually exports is not crude oil itself. It's actually like fractionation, so like propane, ethane, it's those gases that you can use for cooking fuel and so forth.
Well, we do
There's
export a lot of what we call light sweet. It's the highly
right,
refined oils.
right, right. Hmm. And that largely comes from the Permian. Okay.
That's true.
And
That's true.
really look at 2008. That's
Mhm.
perfect right there. What happened in 2008, right? Yeah. Now look at our offshore and everything below that. That's not good. If it weren't for the ramp up after 2008 for the shale producers, we wouldn't have an economy right now,
Mhm.
essentially. Okay. Now, what's going to happen? Now, here's what I really wanted to get to. Here's the huge, in my opinion, catastrophic problem with the Trump administration sort of waddling and wading through this whole Iran war or not war, whatever you want to call it, conflict, right? Is there's no plan in place, so it's open ended. We don't know if there's going to be a resolution
Which is
at this
absolutely
point,
horrible. I can tell. I just really
right?
have to interject a thing about the oil economy here. Is that there are certain thresholds for which the oil economy thrives, right? For example, if it's less than $30 a barrel, that's bad, right? If it's greater than $76 a barrel, that's also bad, right? Because we have this delicate balance between oil producers and oil consumers in our economy right here in the United States, right? So the S&P is composed of both, right? So if one side is suffering, you're going to hit the other, right? So,
Mm-hmm.
for example, if oil drops below $30 a barrel, companies like Exxon and fracking companies are going to suffer. If it goes above 76, this is a hard number. I have studies on it. it will impact transportation, which impacts our food, right? So it's
Yep.
very, very important to keep the oil price between those two values if you want the U.S. economy to survive.
Right. And it's finely tuned to that
Very
value
finely tuned.
as well.
Very finely
Right.
tuned.
Right. Now, here's the problem with what the Trump administration has done with keeping an open-ended conflict and keeping the prices artificially low, even though they're pretty high. I mean, oil prices doubled, right? However, that's not high enough. Why do I say that? In order to get a jump like we saw after 2008, right,
Mhm.
that kept the economy going as long as it has so far, and to keep the stock market inflated as much as it has been, okay? And you see
Mhm.
what there's a bump, right? There's two bumps, two little like uh like a stair step right there. Now here's
Right.
the problem. The price is going to have to be much higher for two things to happen. The first thing is for them to actually drill new wells, you would have to drill in a place
Correct.
like the Permian,
Correct.
okay? Which is where OXY and PR are centered. They're centered in that Permian region,
Mhm.
which is why we've spoken about them before on this show. And they've been performing fantastically, and I see that they're going to do very, very well in the future. The problem with it is the prices aren't high enough for those new contracts and exploration to be written. Okay, now if it's at 140 and then there's some real problem with the price that it would have to come down, it's lucrative enough for them to make those investments then after that fact. But until it
Mhm.
gets that high, it's not worth doing it. So they don't.
That's what I'm
But the
saying with
longer
that
we wait and put
that
that off,
buffer in
the more
price.
of a
Yeah.
problem there is. You see what I'm
Mhm.
saying? So if price would have spiked initially and stayed high for a few weeks, they would have been like, oh, hell yeah, let's sign these contracts. But
Mhm.
with the price being, sort of pushed down the way it has, right? Even though it's doubled, it's right in that it's not high enough for them to do the exploration in the
To
time that
make
would
the
be
changes
necessary to save the
necessary to
economy.
prepare for the economy that's ahead.
Right. Right, exactly. So that's why this is sort of the worst of all worlds, to be honest. It would have been better to panic early than to
Right.
just sort of on and off again, gradually
I
hem and
agree. Let
haw.
them
Right,
prepare.
that's the worst thing you can
Mhm.
possibly do because then nobody's preparing and the right investments aren't allocated and so on and so forth. People can't plan, right? So also you talk about demand, right? Gas prices aren't high enough yet, right? For people to like not take that vacation or just not do XYZ, right? In order for that demand destruction to meet halfway with
Exactly.
what
So
would
so
happen if
they're
there were
doing
a
all
demand
those things
destruction.
because don't forget we're heading into summer, right?
Right,
And the shock hasn't hit, you know?
right. So the shock is gonna hit when it's deep in the heat of the summer, so on and so forth. So the shock is gonna hit probably at
Couldn't
the
be at a
worst
worse time.
possible time. Exactly. So that's why I see this situation being worse, far
Mhm.
worse than I initially thought. Okay. Now we can drill for more oil. The problem with that is there's a lot of pain that's going to have to happen first, and prices are going to have to be a lot higher before we actually
Exactly.
see
So with
the
that,
investment.
why don't you talk a little bit about like, okay, if this is hitting so hard, then why the fuck are we exporting at all-time highs?
That's part of the problem again. If there were planning here, right, and if this
Some
were
adult at the helm would be like, wait a minute, look,
right,
throw it back,
if
guys, throw it back.
if there were some sober-minded people uh, running the show, so to speak, okay, we wouldn't be pissing away. Now it's great, exports are up, fantastic, but we're selling them at artificially low prices,
Right,
right?
right. So just think about it this way, like what did we just talk about with the last slide? how the fact that the price of oil is artificially low. So if we're exporting at all-time highs at artificially low prices,
Right. We're giving away oil, essentially. We're
yeah,
giving away a whole bunch of oil, and we're giving it largely to the Europeans. So we're actually the stuff we should be trying to hold on to. And if we do let it go, right, we should
which
be
China
selling it
is,
and
by the way.
absorbing.
Just
Exactly. That's
saying.
what China has done. Exactly. We should be holding on to it, and there probably should be export bans. Instead, we're giving it away when we're actually going to need it the most because you need energy in an economy to make those investments for further drilling, refining, so on and so forth in the future, right? So this is like a triple backed punch. Okay,
Exactly.
now
So
talking
how does
about
it?
markets, right?
So
This
let's
is
let's
then
think about how
CSIR.
this affects our food, which is a
Right.
very real question.
All those red lines you see there on the graph, okay, um, are when revolutions and riots started in a country. And as you can tell, they were all pegged to respective prices in the countries that they were in. Food prices, the rule is, I believe, 50% of your revenue or what you have goes into food and fuel. Or if there's just not enough of it to say feed your kids, people riot, they get violent, and governments are overturned. Okay?
What is it? What is this saying? We're only three missed meals away from a revolution at
Revolution.
any given
Right.
time.
Exactly. And that's exactly right. So here's the problem. We got two things going on at the same time due to this situation. Okay.
Bad
Now,
and worse.
right. So we have fuel that's scarce, a lot of it. Okay. And fertilizer, which is scarce, and a lot of it. Okay. And we have a conflict that I really don't see an end in sight, period, indefinitely. As far as I'm concerned, that whole
It's only
region,
escalating.
it's either gonna just stay locked down for years or it's gonna escalate. That's I don't see a way around it. Every way I gamed it, left, right, and center. Now, here's the problem when you have the fertilizer shortages and you have the fuel shortages. Now, Danny, you tell me what's likely to happen to the US dollar, right? With what's happening right now, long term. You would expect inflation, right?
Okay, so you would. The issue is how hard it hits everybody else, right? So how is the US dollar evaluated in price? It's with respect to everybody else, right? So yes, inflation will hit everyone. The issue is how hard will it hit US with respect to Japan, with respect to Great Britain, with respect to what's the other one? The euro. So that's three. There's five. I'm missing two, but anyway, it will affect the U.S. dollar. The issue is it's going to fuck everybody else a lot harder, in my opinion.
Uh, I don't think it's gonna. Well, I think the yuan's going to be
All right,
fine. I think the
Canadian,
ruble's going to
and
be
the
fine.
New Zealand and Australian dollar.
Oh,
Those
yeah,
guys
sure,
are going to
sure,
get fucked.
sure. And the euro is going to be trash as well. But I'm not just talking about that. I'm talking about inflation domestically, not just in the United. Of course, it's going to be worse elsewhere. However, when you're talking about, so this is why I say this.
Respectfully,
This
you
is
asked
likely
about
to
the US
trigger.
dollar, but inflation domestically is going to be retarded. I mean, we're talking about levels we haven't seen before because not only, think about it this way, we're not only talking about oil, we're not only talking about fuel, we're talking about fertilizer, we're talking about like food resources, we're
Mm-hmm.
talking about infrastructure, right? So everything is hitting all at once. You think eggs were bad at $10 a dozen? Let's talk
Mm-hmm.
about like 25.
Yeah, I could see that happening. Now, and part of the that's and it's even more worrisome that uh, you know, people aren't taking it seriously. Because how do I want to put this? Yeah, it sucks at the gas pump and everything like that, but this is a globally, like, this is an event that will re-network the entire world. And in fact, what I'm talking about with the fertilizers and the fuel, this is definitely going to cause revolutions in other countries. It's going to cause starvation, and it's going to cause for volatility and
Not the
violence
least of which
all
would
over.
be Africa. Africa is fucked.
Yeah, that's going to be bad. That's going to be super duper bad. Now, now you tell me, Danny, with all of that going on geopolitically, more volatility and so forth, what do you think it's going to be like domestically in the United States and say Canada?
So Canada is a big okay, so Canada actually benefits from the fact that they are fairly anti-fragile. The issue is they're not taking advantage of it, right?
Mm-hmm.
So they have the exact same problems the US does. Right. So this is going to impact us hard in the areas I just mentioned, fertilizer, food, transportation. All of those things were things that led to actual measurable, maybe not necessarily revolutions, but actual events, right? The trucker event in Canada, right? Yeah,
Right, that happened during COVID, right? Which we've
that
compared
that
this
that was a
scenario to.
measurable event. So when you take this series of coalescing factors, I think you could get bad. The issue is um, a lot of it, as you know, a lot of these events, a lot of these protests are sponsored, right? I think what they're going to try to do is suppress this, suppress the news about it, suppress the events about it, blame it on something, Trump or aliens or whatever. That's what I'm foreseeing. The issue is, I just the more I talk to people, the more like I just don't see them buying it. You understand? Like this is different from the George Floyd riots, right?
Mm-hmm.
Like those were sponsored. They had like bricks everywhere for people to throw. That's different from like you literally can't feed your family. Like you just can't.
Right, right. Yeah, I there's going to be yeah, and just overall, there's globally there's going to be far more violence and revolutions, and I
As there
don't
should. I
as
mean,
right. The thing in the United States that is going to be sort of interesting to see, because we haven't seen here, we've never really seen this before, Danny. We've never seen real physical scarcity within the United States. Now, granted, it's probably one of the better places to be, unless you're like Russia or China, maybe. To three of the best places to be. I wouldn't want to be in the EU, of course.
nope.
That's Yeah, that's going to be super bad. But the the three best places, Australia, man, that's going to be a complete basket case.
Mhm.
So I could, where do you think this? Yeah, where do you think this is going to be like in a, say there is any method to madness or whatever. So what I could see what's happened essentially is people are so unhappy with the world system that they've made decisions where, and this makes sense because this is sort of like a Trump. I could see this sort of Trump psychology where it's like, I'm not getting what I want, so I'm going to flip the game board and make everybody pay
Listen,
because
I think the people have to make a stand, man. I think everybody I've talked to, staying here in Europe for a month, people are sick of this shit, right?
what do you
So
mean?
I think there's only so far you can push people like Iran, the Iran war in the US. Everybody I know who voted for Trump is just like, no, what the fuck is this? Then you
Hmm.
have the king
I can't hear
of the
you.
UK. You have the king of the UK coming over and lecturing the United States Congress on how we need to go to war with Russia on top of this. Like, whoa, what in the Epstein is this?
Yeah. Yeah. That's honestly, I'm gonna have to look into that further because I can't even make sense. There's something weird about the UK. They just have it out for Russia for some. I don't know the history behind that or whatever, but I don't. Yeah, I'm not sure what's going on there. But
No,
it's like
it's
they talk about.
Israel putting its foot down. It's really Israel putting its foot down, right? Like they were the ones who coalesced the U.S. to make the strikes and keep the strikes. And Netanyahu was very clear about the fact that he did not want to let peace happen, no matter what. He is gunning for greater Israel. That's just a fact, right? And so Russia is just a part of it. I mean, look at what's going on in Ukraine right now. All the young men are dying. So what are they doing? They're trucking millions of Africans in. This is a fact. It's a Kalergi plan. It just is.
Yeah,
This has been
the
long
EU.
stated.
Yeah, the EU too. It sort of has a. It seems to have a death wish with every single thing that the leadership does overall.
Every
You
single
know,
thing
like
the leadership does in
yeah,
Western Europe is to the demise of its people, the direct demise of its
right,
people.
right. It's
Period.
like I think in the UK and Germany they were pushing forward legislation to move forward with a draft or a draft registration, and in that law, or they were gonna I think they were gonna raise the age of the draft just like they did in the United
Well,
States.
they
By the
did
way,
that in the United States.
right
Yeah. So
now,
okay, uh, let's just run this through a thought simulation, right? How many 42-year-olds do you know? How many 42-year-olds are combat ready coming from someone who actually served?
hmm
Like, I'm 42. I don't consider myself combat ready.
right, right, right. No, that's gonna be that's gonna be a gross miscalculation. But in part of that law, Danny, was that immigrants didn't have to register for that draft. So they're going to send off like those
Right,
German
because they're here to repopulate with our women. Duh.
yeah, right. So it's what's going to be interesting though is it's very clear that we're going to have material scarcity and there's some really malevolent stuff going on, right? And it does, like, with what they've been doing without announcing too much of it with the draft registrations and so forth, there's definitely movement behind the scenes to gear up. Well, clearly in the EU, they've been vocal about it. Like NATO is talking
They're
about
very honest about it. And, like,
yeah,
respect
they've
to
been
them, they're
right,
actually saying it.
right, right.
Like, there's a
So, and
document in the UN, like, legislation called replacement migration. That was deemed to be a conspiracy theory. No, there's a document entitled that in their public document repository.
yeah. So it's going to be interesting to because it's like Mike Tyson said, like you have a plan until you get
Until
punched in
you
the
get punched
face,
in the face. Yeah.
right? So it's going to be
That's why
interesting
my
to see
nose
how
looks like
this
this. You wouldn't know about that, would you, Zach?
yeah, it's going to be interesting to see how this actually unfolds though, because uh like I said, I give it 3 weeks. I'm actually kind of pleasantly, I guess you could say paradoxically, surprised that oil's finally moving, inching, going back up. And actually, it's gaining quite a bit of ground rather quickly. Okay, that's actually one of the best things we could have right now. The
Yes.
best cure for most of this is actually high oil prices. Okay, now I peg it at 146 a barrel, but it could go as high as 200. Okay, and that's what we actually need. That's
I'm
the
looking at
tough
150 to
medicine that's going to be
160.
necessary.
Assume like
Yeah.
let's run a scenario. Let's say that this situation was solved tomorrow. I still think we're going to see 150, 160. That's my target.
Okay. Yeah, you would be better with the targets than me. But uh after that 3 week period, and so we have a deadline now. Within 3 weeks, I would have it be in the one, at least me, I'd have it in the 140 range, which is a good thing because that's very much needed. And then we would say, what, 60 days after that, we would expect finally for the corrections to start occurring in the markets, or do you think it would happen before then?
So I actually think that we've called this well before that, right? So let's just like be honest here, right? Like the situation in Hormuz has no um, promise of any resolve, right?
Right.
But
No resolution.
even if it did, the shockwave of that supply change and how we're dealing, by we, I mean the US, how we're dealing with our own supply and our own exports, we're going to feel that shock imminently. And by imminently, well, I mean this chart right here. Like, this is just the beginning of it, right? If we
Mhm.
pull back a little bit, we see like, oops, some scare. Oh, Trump says some things. And then this is actually, you see how this is creeping up? This is not like event driven like this. This is
Right.
like the market saying like, oh, uh-oh, uh-oh, right? And there's no abating this, even if there's an immediate solution in Hormuz, because we have, as we discussed on this podcast, imminent infrastructure issues that are
Uh-huh.
going to hit immediately.
Okay. So yeah, so what you're saying is, while I'm giving it some time, you could say like it could happen as quick as tomorrow in the markets, or so. Is that what you're getting at?
What
Or
I'm saying is this up and to the right, I do not see this abating. I do not see
okay.
this
Okay.
correcting. I do not see this reversing. And there are legitimate like infrastructure reasons for that in the United States. Number one, the fact that we export more than we produce at prices that are untenable, right? That's
Right.
number one. That's only number one. Number two is the fact that, there's a liquidity crunch between what we export and what we take in. What we export is predicated on a certain amount that we take in. If Hormuz is compromised, even if that's resolved today, they open up Hormuz, it's all good. There's still that lag period for which we can't
Make
ameliorate
up the
that.
difference. Right.
Correct.
Can't make up the difference.
Correct.
Right.
Correct. So there's multiple reasons for which this graph should only increase up and to the right. If we see any corrections, they're only technical, and they should be considered buying opportunities. That's my two
Now,
cents.
I got you. So now, with Trump talking down the markets, which him and the administration have done a pretty good job of doing, as far as credibility goes at this point, because he's been all over the place. Like, you know what I mean? Like what we said in the beginning,
Yes.
where it's, oh, the Iranians are begging. It's like it. I don't even. I've lost track of where he's at. Like with it's, you may as well have like a Mad Libs thing.
No, we, we
You
we
know,
do have like a legit Mad King syndrome. Tim Dillon made an excellent point that we just completely lost even the shit talking war because
mm-hmm.
anything any Trump apologist could say, like the Lego videos from Iran are
Mm-hmm.
saying a lot better. And I wish I could have a counter to say like, you guys are wrong because of this, but I don't. I'm sorry,
Yeah.
I just don't.
So yeah. So what we're saying from here is that this is just indefinitely up and to the right. Now, 60 days
It's
till
like
March.
just to make this clear, I do not see this bull trend in oil abating anytime soon in our favor. That is the U.S. Like I see this continuing up and to the right. All dips are considered buying opportunities until about 150. That's my personal opinion.
Okay. So when, say, the markets do tank, okay, oil prices high, stocks down, okay, the you think the Fed and the Trump administration is going to come in to try to rescue, correct?
Yeah, absolutely.
Okay. So they'll try to rescue, but what would be the problem with that thesis that Trump will I'll just keep investing because the Trump administration will just bail us out.
Well, we had some really good examples of that, for which hedge funds would say, believe in their, allocations, and they tank, they buy more, they tank, and they buy more. I think anything after this is just delaying the inevitable, right?
Right.
We are on a certain course. At $150, let's just put it this way: $150 a barrel. The S&P is going to be in the 650s, right? Like,
Okay.
the S&P is not going to go away, right? If the U.S. if the S&P Put it this way: if the S&P goes away, the U.S. has long gone away, because these corporations are going to outlive the United States. I am long
Mm-hmm.
on record as saying, like, if you want to buy bonds between the US Treasuries and Coca-Cola, you buy fucking Coca-Cola. Coca-Cola
Mm-hmm.
will outlive the United States.
Yep.
I put my
That's
life on that,
yeah, that's
right?
fair. That's fair.
Right. So
Yeah.
so so if the S&P hits 650 or 6,500, you fucking buy with everything that you have in your life, because these companies will outlive the United States. But
Mm-hmm.
I do foresee us retracing from 7,200 to about 6,500.
Okay. Now, with that correction, how do you think the energy sector is going to be like? How do you think they're going to perform? Would they go down
So
with
the
everything
issue with
else?
the energy sector is that they're taking, and I see this in Exxon. I've been researching Exxon. Like, they've taken a lot of hits, right?
Mm-hmm.
Like physical hits. But
Yeah.
again, these are institutions that will survive the United States. Exxon,
Mm-hmm.
I would look more upon like the onshore stuff, as we talked about before,
Yeah.
because they are
Right.
less vulnerable to physical attacks. And with
Mm-hmm.
those higher oil prices, they will have more to invest in their own onshore resources. So those are the ones that you want to, be investing now. For example, we could take a look at Oxy. If you remember, if you've been following this podcast, we talked about how it took a little bit of a retracement, as
Mm-hmm.
my levels are basically perfect. We pivoted
Mm-hmm.
here. This is called a pivot, where we like bounce really hard and we make a run for higher levels. Almost back. We just had this gap to retrace, back to 66.85. That was one of our
Mm-hmm.
picks, one of our long-standing picks, and
Yeah.
it's almost recovered the highs, for
Now,
example.
right, right. Now, what I'm trying to say though is there going to be contagion in the market where like the S&P drops down. So we will would like being heavy energy,
So,
primarily in the
so
Permian.
well,
Would they
first I have
also
to,
go down or yeah?
what I have to, what I, okay. So yes, if the S&P goes down, everything goes down with it, just
With it.
because of the fact
Yeah.
that it's U.S. stocks, right? The
Right.
issue is, as I mentioned before in this exact podcast, we do rebalance the S&P, right? So right now the S&P is very heavy in like tech stocks and AI and stuff like that. There have been times where it was like super heavy in oil, super heavy in like, durable goods, whatever the economy calls for, right? So I see us pulling back very soon from the whole AI craze and pulling us
Yeah.
back into onshore resources. That's how I
Okay.
see the S&P being reweighted. So what I'm getting at here is we're going to see a dip, a restructuring, and then actually a recovery.
Okay. Now, what I'm looking more at commodities right now because as we talked about the food price inflation and so forth and the fertilizer shortage.
Mhm.
I'm relatively new to commodities. I'm looking at the agricultural sector primarily. Um, So if you have any suggestions there, what I was going to say is, if you look at Cummins specifically, that's just sort of like the flagship of what I think we're going to start to see in the United States. In the Permian, we have a lot of the shale projects and so forth, which is the tight oil that we showed earlier. Now, what's really cool about this company, this is just one company, but I have a basket of sort of like alternative switching companies at a smaller scale, though, where as far as transport goes, they have like biodiesel engines and diesel engines that can burn like natural gas, right? Not gasoline, but like methane, right? Propane, ethane. And like it's so cheap in the Permian, they can't even give that stuff away. Like it's just coming out of the Permian and they're just scrambling to like, how do we sell this? And like we don't have enough LNG facilities right now to export it. But there are a lot of companies that with the drilling, like as they have like a dual pump system now where they're pumping the oil and the natural gas, right? So what I actually could see happening is crude getting high enough. Again, this is where high prices would sort of be a blessing if markets could actually work like markets, right? Then
In your defense, yes, there are certain thresholds for which we hit a barrier and like certain companies thrive. And this is
right,
why stock indexes like the S&P actually are doing their job and saying like, oh shit, AI is not the thing anymore. It's onshore resources, and then they redistribute.
right, right. And so that's where the next, as far as I can see, that's when the next, how do I want to say it? Looking forward, right? The big investments are going to be in like domestic energy and
Domestic
domestic
energy and
food.
durable goods. I can tell you
Right.
we are. I don't think it's any. Okay, so I have not listened to the Fed's announcement. I can't see it being good. You know,
Yeah.
I'm sorry. I just
They're going to
fact check
raise
me on this.
rates.
Fact check me on this, but I just can't see it being good. And typically, what you have is this ebb and flow between like risk on assets and risk off, right? When the economy is just going crazy and doing good, you see a lot of investments in tech and like speculative things. When you see it pulling back, you see a lot of investments in, oh, I don't know, onshore resources, durable goods. I see a
Mhm.
flow back that way. So mark my words on this. Snapshot me on this. I see a pendulum shift back to the things we just talked about, in particular, durable goods and onshore energy resources.
Right, right. And Cummins, it would be now their stock valuation is already high, but they actually manufacture engines that can burn natural gas. Like that's awesome. Like imagine a fleet of those suckers just using natural gas that like we just comes out of the Permian like free,
I mean,
essentially, as a byproduct,
that was
you
already
know?
done in the 1900s, but God bless them for like doing it now.
Hey, right, right. Exactly,
It's never
exactly.
too late.
So it's more right. It's more just it's not even like we have to do a total transition to solar. It's not even that complicated. It's still a hydrocarbon. It's going to exist anyway. It's also cleaner than, like octane and so forth
Actually,
and all that.
what
So,
we should actually do a special on like free energy alternatives because like
mhm,
I mean
yeah.
Henry Ford had like a whole like segment on this with his cars, right? So anyway,
Right.
that's
But that's
we
again,
can
I
shelve
think
that for
that's
now.
honestly, I think it's going to be necessary for
It
that
it actually
transition to
absolutely
happen
will
in
be.
the S&P. Right. In fact, like this, in order for things to get any better, at least this is my view, you know, people are going to keep on doing the same thing until it's cost prohibitive.
Until they just can't do that thing.
Exactly. So markets being what they are, I hope we actually have high prices in the future and markets actually function. So then those actual material changes can start to happen sooner.
Yep.
Right? Because the longer we wait and the longer this sort of just gets inflated artificially, the bigger and badder the disappointment and the shortcomings and the shortfalls are going to be.
Yep.
But
So we have time for maybe one more pick. Like, is there anything else you had?
Well, VLO is one. Nutrien we talked about before. MTDR, which is it's just another. It's
Look at this.
it has it's yeah, MTDR. Right, that's right. I bought it a while back and still holding on to it. But they actually have exposure to the Asian markets, I believe.
It does have
So,
dividends. By the way, we're big fans of dividends.
But what I'm looking at right now is companies. I was wondering if you had any input for.
I did want to make just one flex here. If you guys remember when I recommended Intel at $20 and now it's 96. I'm just saying, I did call it out. It is on our podcast. Anyway.
But MTDR and VLO's been performing pretty well. Actually, I think VLO, I made $11 off VLO today, just today. So that's been doing pretty well too.
Awesome.
Now, right now, I am looking. Here's the problem. There are alternative, like I love geothermal, and nuclear is a huge untapped resources. It's a Canadian. I don't have it off the top of my head, but there's uranium mining in Canada, and there's a good nuclear company, but it's owned by Bill Gates. So
I do have a uranium mining ETF that I've recommended. I believe I've recommended it here, but if not, here it is. I bought like way back here, like $6, but here it is. I guess that's probably all the time we have. So
we'll see you next week. Let's honestly let's hope the oil price. I mean, I don't have any hope. Oh, I thought you froze. I don't have any hope that this is going to end anytime soon. Sure, it would be great if peace could all of a sudden break out.
But as we said, even if it does, there's a shock wave that's going to hit for what we haven't prepared for.
Correct. Either way, it's going to happen. But talking about domestics and commodities, think about it, Danny. The business that I have a business plan already drawn up for, training veterans in permaculture practices and using public land.
We should do a separate segment on that. I believe in that. Like,
there's
whatever company is sponsoring that, they have my money. Like, that's where we need to be looking. Yep.
Yep.
Awesome.
All right. Sounds good.
Toodle pip.
See you next week.